So, welcome to today's episode. I'm Anna Y. James. I'll be taking you. Yesterday, I did a brief introduction to Forex trading, and today we would try to understand how to draw trend lines, support and resistance, and what to look out for when trading in the financial markets. So, welcome to today's class, and thanks for joining. Please subscribe if you have not, like and share my video, and I'll be really happy. Thank you. So, as I said yesterday, I trade mostly gold and Euro USD. Those are the two pairs I trade mostly. So you can see that the gold pair has been moving upward. It has been trending. It has been bullish since the month of August. It has been bullish, and you can see that if you pay attention, you see where the price it got to as high as 2,700. But that's not what we're here for. We're here for how to spot opportunities, how to get sniper entry, and where to draw your support and your resistance in a trend line. You can see this is a blank trend on the daily time frame. Price is obviously moving up. So still on the daily time frame, this is where the price got to as high as around 2.7. You can see. So we'll mark this area as our highest high. Ignore this recent higher high. These are most recent higher high. And price after price got to this point, it got rejected, and it came down and it touched this previous low. So this is our support for now. These two places will be our support. So that is how you know how to draw your support and resistance. Support, resistance. This is support and this is your resistance. This is a rectangle box I use in drawing support and resistance. So the next slide, it's a more closer up of how to draw that support. So you mark from here at the previous at the most recent high, the highest high, and stop here. Obviously, you know that price will obviously get to that side again. And here, previous low, lower low, this two. Know that when you're doing your trend line, you want to draw a trend line where price where it's very significant. Either price has gotten to that place and struck it like twice or three times, or it is the only low or the only high available at that particular time. So you just mark it. Know that it's psychological level, and most traders would want to enter from that particular zone. So this is the 4 hours, 4 hours candle. You can see in the 4 hours, if you look, this is daily candlestick. You can see how this places. So in the 4 hours now, it is now here. Your higher low is now here. So you mark this side in 4 hours. This one is still on the daily. This side, because that's the only place price has gotten to the highest point place price has reached. You mark it here and mark it here. But now you can see that price is ranging. You can't really do much now. You just wait. Don't trade now, because if you trade now, there's a high probability that you might blow your account. So you just be patient. In forward, then we go down to we go get a more closer view. Here, here, the same thing. So now we have to. I'll show you how to draw trend lines, how to connect your trend line, so you know where price would come and where you should pay attention to psychological level basically. So this is tool we use. We use this tool. It's our trend line tool. That's the tool we use to draw the trend line. So basically, why drawing trend line? Remember, it has to slope in a very like in this angle. You can see how its sharp price is sloping effortlessly, and there's this probability that price will respect it when it comes back to this price. Either here, either it breaks it, and if price breaks this space, obviously you are targeting here. That is the next psychological level we should targeting. This is still under the 4 hours place. Then go to the next slide. Still in 4 hours, the higher slope. 4 hours. You can see price gets here. Either it respects here. Remember, use proper risk management when trading. If you want to understand proper risk management, drop a comment in the comment section and let me know. If you have any question, you're confused or you don't understand what I'm saying, drop a comment in the comment section. Thank you. Let's go back to the class. So the higher high and the higher low, lower high and lower low. You mark those levels with your support with your resistance and your support and your trend line. You mark your trend line because there's this thing about trading gold. Gold tends to respect a lot of support and resistance and also trend line. That's what gold respects. But if you have been trading Euro USD, you know that Euro USD respects a lot of it's master of fake out. It will fake you out if you're not being careful. Euro USD will fake you out. But gold doesn't really do fake out. When gold breaks, it breaks and it moves with momentum. So this is the 4 hours. So let's go to the 1 hour now. And this, remember, this trend line to this is the tool I use in drawing it here. By the way, I use trading view to analyze my trade. So this is the tool I use. So draw it connected to there. This is 1 hour. Still in 1 hour. If you can see the 1 hour, right? And you can see the 4 hours. This is 4 hours. Almost similar, but just the difference is that here now, when we mark here in the 1 hour, this is the place that will become more significant. See now, as you can see, this is the place that here in the 4 hours was here, was our lower high, was our lower low. So we mark that side because price obviously got to this place. I touched it 1, 2, 3 in the 1 hour time frame. You get in 1 hour. So let's go to the 15 minutes. 15 minutes is the time frame I use in placing my entry. That's why I spot my opportunities. That's why I look for confirmation and every other thing. And so this is the 15 minutes. Price is currently trending. If you see it in the 4 hours, you see the price was trending. Let's go to the daily. In the daily, you can see that this price was trending, right? On the daily. But when you go to the 15 minutes, in the 15 minutes, you see that this is the range now. You can see also enter from here, but it's not advisable to enter from this place because it's very risky. You might blow your account. So, but if you want to enter, first you have to understand that the market is a bullish market. So you're mostly looking for opportunity of buys. So you enter from here, here, and here. You have to sit on your hands, wait for price to get to you before you place any trade. So that is it for today. And when you enter here, obviously, look for the next psychological level where price might uh, start rejecting, which is around here, because this is when the bullish market. Market is bullish, but currently the market is consolidating because of it's December. December is not a good time for traders to trade because most banks are on holidays, most traders, most hedge funds are on holiday in the US. So basically that's it. And hope you enjoy my class. Thank you. And then you can find me on YouTube as Anna Y James, on Facebook as Digital James, and TikTok as obviously James with the X. So please try and subscribe, like, and share, and see you guys in my next episode. Thank you.